Hi guys, Stanley here. I'm the co-founder of valueinvestasia.com, an investment portal where we give you investment news and in-depth analysis on listed company every single week. If you're new to this channel, remember to hit that subscribe button so you'll not miss out on any of our new videos. Time to talk about REITs today. Property has stayed one of the most common asset classes for investors, especially here in Asia. However, physical properties have some disadvantages. They require heavy upfront capital, constant upkeep, and the buying and selling process can take months. So that is why real estate investment trusts, or REITs, offer a great alternative. It acts as a proxy for owning physical property, and yet it can be easily bought and sold through the stock market. So if that sounds compelling to you, here are 10 key reasons why you might want to invest in Singapore REITs. Number 1, land is scarce resource in Singapore. Singapore is a small island and yet one of the largest, highest density human population in the world. That's the reason why the government has been trying to maximize the space by building higher and also increasing plot ratio for land. Therefore, local commercial REITs like Fraser Centrepoint Trust and Mapletree Commercial Trust, which owns a portfolio of retail malls and also commercial property in Singapore, are sitting on some of the most valuable land in Singapore. And just by buying into such REITs, investor can own some of the crown jewel land in Singapore. Reason number 2, tax exemption. Most companies must pay corporate taxes, and in Singapore, the current corporate tax rate is around 17%. Singapore REITs with local assets, however, have a distinct advantage in this area. This is because as long as they pay out about 90% of their earnings as distribution, they can enjoy tax exemption under the tax transparency treatment. This is a key reason why yield in S-REIT are very attractive, even though the interest rate in Singapore is very low. Next, the ease of buying and selling. Buying and selling physical real estate can be a tedious process. You'll need to engage a property agent, a lawyer, and get in touch with a banker for financing. On top of that, properties are very illiquid asset and it could take months for you to dispose of it. In contrast, buying and selling a REIT is extremely easy. As they are listed on the stock exchange, you can easily buy and sell them through your stockbroker. The market is also fairly liquid and you can obtain your cash in a matter of days. Next, buying in parts. When you are dealing with physical property, you can't really sell it off piece by piece. It is impossible to say just sell off the dining area of your property while retaining the rest of the house. In that sense, it is not possible for us to choose how much we want to invest in a property because the property prices dictate how much we should invest. For REITs though, you can choose how big your investment should be it just $100 or $1 million. You can still own some of the best property around Singapore. Next, leave it to the professional. Owning an investment property comes with a long set of responsibility. That includes maintenance, tenant management, and also paying all the bills and fees associated with it. You have to check on the property to ensure that it is in good condition and also find and manage your tenant. And if the unit is vacant, you have to cough up additional cash just to maintain the mortgage. On the other hand, REITs appoint a manager to take care of all the above, and the portfolio is also professionally managed by a team. All you have to do as the property owner is to wait for your distribution. Next, buying around the world. REITs also open up opportunity to gain exposure to real estate that are typically out of reach for us. These include overseas properties that are tough for investors to purchase individually. You can target REITs that specialize in overseas properties to gain exposure to a specific market that you're interested in. For example, Manulife US REIT provides the unit holders with exposure to 12 commercial properties in the US, and yet it is also listed in Singapore. There are also newly listed REITs like the Daiwa House Logistics Trust, which owns a portfolio of 14 logistic properties in Japan. Or you can invest in 10 freehold data centers within US and Canada through digital core REITs. The next reason is regular distribution. REITs are well known for paying out predictable distribution due to their requirement to pay about 90% of their earnings. So most REITs either pay a half-yearly or a quarterly distribution. For investors, it is basically the same as collecting rent from your REIT. Next, dividend reinvestment option. Some REITs offer the option to get new units as the regular distribution. These new units are known as scrip and can allow you to increase your invested unit in the REIT without incurring additional costs. Some REITs even offer slight discount to unit holders when they are getting this scrip. And by accepting the scrip, it is similar to getting cash distribution and then using that to reinvest into more of the REIT's unit. Compared to a physical property, it is extremely hard to reinvest in a similar type of property with very small amount of capital. The next reason is buying REITs for growth. Sometimes the REITs can turn to their existing unit holders to raise funds for more acquisition. Some acquisition might involve a mix of debt and equity, whereby the REIT will undertake either a private placement or a rights issue. For existing investors, you have the right, but of course not the obligation, to subscribe to this new unit. And from this acquisition, it will give you a chance to experience the growth potential of the REIT as well. And finally, the last reason being attractive long-term return. REITs can offer impressive return over the long term. According to the SGX, the 10 best performing Singapore REITs have delivered about an average return of 12.5% per year over the past decade. Compare that to the Singapore benchmark Straits Times Index, which only achieved an annualized return of about 4.1% over the same period. So it seems that investing in REITs can be more profitable than stocks in Singapore. And there you have it. These are the top 10 reasons for investing in Singapore REITs. Are you a REITs investor in Singapore? If yes, which REITs is your favorite? Share your thoughts with us below. If you've gotten value from this video, I hope you give us a like and share it with a friend who you think might benefit from it as well. And if you're ready to take the next step, you can also check out our free investing course at valueinvestasia.com/free course. Over there, you can learn practical skills of investing like reading the financial statement to how to value a stock. As always, till we meet again, my name is Stanley. Invest safely.